Now that Inauguration Day is behind us, will the bounce continue outside of the day? In this video, I want to go over the market outlook now that Trump's taken office and where I see us going from here. Let's go. Lots of news. Lots of news coming out of this three-day holiday. And we're going to get into it and what's important. All right, I'm planning on skipping all the news that makes no sense to us, unless I think it's something like the meme coin mania that happened over the weekend that we need to talk about. And the reason I need to talk about it is because I want to steer you away from this meme coin mania. I'll get into it and get into all the details here later on. So we're going to talk about stock markets. We're going to talk about, the post-inauguration bump that's happening in the markets. It's happening in commodities. It's actually happening most definitely in cryptocurrency. We're going to cover that too. We're going to cover some of the EOS, executive appointments or executive orders, and the ones that I think are beneficial to us as pattern traders. All right. So let's go ahead and we're going to get started by looking at the markets. So that's where I want to start things off. Oh, by the way, guys, this session's being recorded. Most importantly, see a lot of you on here today. Welcome aboard. I just want to let you know that I will do a Q&A session afterwards. So once I get through everything, if you have questions, comments, etc., you got a popular question, we'll put it up on the screen and we will talk about it. All right, so that's the plan. I'm going to put this into three segments today. Going to do a session on the markets, going to do a session on Bitcoin catalysts, what I see happening for 2025, and then I want to do a little session on meme coins and how I'm trading this space. So that's how we're going to kind of trunk it up. All right, so there you go. All right, coming out of the three-day holiday weekend, coming off of Martin Luther King Day and, of course, Inauguration Day, here's where we stand right now with the markets. I've got the S&P right now that got a bit of a bump again coming out of Friday and then coming into Tuesday. We are up on the day as we see it up a little more than 0.5% as of, I would say, probably after lunch today. And we're looking at, I haven't changed any of these here in the recent. We came into December with some new all-time highs. December was one of the worst Decembers we've seen in several years, but January has kicked in and done rather well. We're up for the month of January. My target on the S&P, right up here, baby. We're looking, I think around 625 is what I'm looking at for a new target in the S&P 500. However, if you're a contrarian trader, I'm a seasonal trader, but if you're a contrarian trader, the contrarians all got long sometime at the end of December and also in middle January as contrarians see new all-time highs in the not too distant future for the overall stock market. 620 to 645 is what we see on the screen when you look at Fibonacci, right? Just something I want to add for those of you that are, that are a bit contrarian related. If you're a contrarian, you got to be looking at this chart right here. This is the bond market. The bonds have been in a downtrend since little after Labor Day of 2024. We went from 100 on TLT down to 85. 85 and down at 85, I put a big 5 and a question mark right here. Is this the wave 5 bottom? All right. We don't have seasonality right now in bonds. I can't tell you whether seasonally it goes up or seasonally it goes down from this point forward, but we have broken some interesting trend in the mid to high 80s. Coming off of 87.77 earlier today, we get above 88.5. I'm going to call it 88.5 for TLT. And I believe that bottom is in, and we're expected to see some higher lows and higher highs. This means lower interest rates. Take a look at, I was looking at mortgage rates, which were 7% earlier this month. They've dropped into the high fives. That's how big the turnaround has happened just in the last week. We've seen a full percentage point drop in 30-year fixed. So this chart has a lot to do with it, right? Speaking of moving into the next thing, stocks, bonds, currencies, commodities. Take a look at USO. So USO coming off some multi-month highs. They're around 85. It's off today. It was off about 2% earlier today as Trump is initiating the petroleum reserve to top it off, right? You know what I mean when I say top it off? You know, when you're at the gas station and you're squeezing as much as you can into the tank, those of you that are still running on gas, all right? I have a diesel truck. I always top that thing off. And topping off means I'm squeezing to get the last little drop in there that I can. I don't know. That's just a habit that some of us have. Well, Trump is talking about topping off the petroleum reserve. And drill, baby, drill, top off the petroleum reserve. That immediately caused some moves to the downside in USO. I expect USO is going to be a bit more volatile in the coming weeks, but I like it going into February. I like it in the month of February and in the month of March, April, May, June, and July. You know what? I'm going to hold that for a longer session, and we'll talk about that in a couple of weeks. Know this, I'm expecting that we will see higher prices of oil, and you might wonder why. If drill, baby, drill is now the keywords of choice coming out of the new administration. There's a reason behind that. I'll talk about that when we get to it. Gold, GLD. Last week we broke out of a triangle formation, and it was my expectation, because I'm not 100% right, it was my expectation that we were going to break down. But given all the information that is coming out of the new administration, we're seeing gold rally like all commodities, like the stock market, etc., because there was a new not a poll, there was a new graph that I saw that came out recently that showed inflation in a Democratic with a Democratic Congress and a Democratic White House, and inflation with a Republican Congress and Republican White House. And these two charts have deviated quite a bit, where it's showing that the chances of inflation are going to continue to be lowered in the Republican Congress, Republican House, Senate, and White House itself. Now, obviously, time is going to tell whether that's going to actually happen, but it is making things like the bond market go lower, and it is making things like commodities move higher. Speaking of commodities, let's move to the digital commodity as we round out the stocks, bonds, commodities, and crypto commodities. This is Bitcoin. Now, I don't want to say I told you so. And I actually even have a t-shirt now that says, I told you so. But I'm holding off on that one. I'm going to hold off on that one until I hit some price targets that I'm looking at. I'm going to give you several price targets. My first price target is 125. The reason why 125K is a first price target is because that is an area where we will be taking off some of our long-term crypto holds, which started around 30,000. Right? This is some of the published crypto stuff we did last year. We're going to be taking some of those off at, again, around the 125K mark. So that's one. I think we hit 125K. I might wear that shirt. I'm definitely going to wear it if we get a little bit higher, and 200 is what I'm looking for. Really, then I'll be probably wearing that shirt every day. But take a look at the chart here. You'll see 3 to 1, 5 to 1. What those are basically off the move that happened earlier in January. that put us down here at around the 89 area. You take that move and where the markets turn bullish once again. And that area is what I call the risk zone for traders. The reward zone is going to be about 3 times the risk, getting from where we are now, or actually where we were just a day or two ago, to around 125K. 145K puts us at a 5-to-1 reward to risk ratio. So if you still wonder if Bitcoin makes sense, not just as an investor, but as a trader, looking at this chart may give you reason to get a little bit more excited about crypto. So we've got a new administration. We've got a lot of new executive orders. And you know what else we ended up getting, which rounds out this cause here for rejoicement for the digital community, is that crypto funds this weekend, coming out this weekend, got a $2.2 billion influx. That's also a new high. So new highs expected to come in stocks, in commodities, and in cryptocurrency.